Hello everyone, welcome back from the break. I have already recorded the part B, but due to some technical error, there was no voice, so I am recording it again. So might be you are just delayed to get this particular video, but here it is. Now everything looks fine. So we are recording it again. So starting with the speculation business. Till point in part A, we have covered the section number 28. Now we are moving ahead to start with the speculation business. Okay, see, what does it say is that there are certain kind of a business which is in the nature of speculation, that you are doing that particular business as a speculation, that you do not know what will be the outcome, but you are just playing like a gambling thing. Okay, just you are speculating things. Okay, these kind of a business are deemed that they are distinct and separate from your normal business. Suppose your normal business is running of a hotels. Okay, but you are involved in certain kind of speculative businesses, like you are doing what, you are doing some trading. Okay, you are involving in purchase and sale of some commodities, including stock, shares, and everything like this. So these are known as what, speculation business. Okay, but on a usual basis, then only it is going to be a speculative business. So what does it say is that, see, speculative transactions. What are the speculative transactions? These are the transactions in which a contract for the purchase or sale of any commodity is done, which includes the commodity word includes stock, shares, and is periodically or untimely settled otherwise than by actual delivery. What does it mean? That you are trading in stock, you are trading in shares, but in that particular thing, na, you are not delivering that particular stock. Like if you have contracted that I will pay you 100 shares, I will give you 100 shares of TCS. Okay, I will pay you 100 shares of TCS of that much amount. But in actual, are you sharing the 100 shares? No. What are you doing in the stock market? You are doing the price, you are settling the particular transaction on a price difference basis. Okay, you are settling the particular transaction in a price difference basis. Okay, if I have to give, suppose if I have to give 100 rupees to you, you have to give me 95, so the balance 5 rupees I will give it to you. This is what the price difference is. You are not actually giving 100 rupees, I am not actually given 95 rupees, but the price is the settlement, the whole contract is settled between the 5 rupees, which is a price difference. Okay, so these are not by the actual delivery. I am not giving you the 100 shares, I am just giving you the transfer of the price difference. Okay, understood? I am not usually giving you the shares, you are not giving me the shares or the price. What we are giving, just we are settling in the price difference. Okay, these all things are majorly tackled in the derivatives of the forex chapter of the AFM. Okay, now in the Income Tax Act, what does it say? It says that if you are dealing in a speculative business, so we will deem it as distinct and separate from your other businesses. What is your normal business now? It is different, and if you are dealing in the speculative business, then it is going to be the different. Okay, so what does it mean? Means that the calculation of a speculative business will be done separately, and the calculation of a normal business will be done separately. So suppose, let me give you an example very importantly. Just listen to me very carefully. Okay, speculative speculative business. Okay, now understand to me very carefully. What does it say is that is a distinct and separate business. Okay, it is a distinct and separate business. Means what is my normal business is different and my speculative business is going to be different. Correct. Now listen to me very carefully. I have two business. One is speculative business, second is normal business. I got a loss of 10,000 rupees in the speculative business and the profit of 50,000 rupees in the normal business. Now, the catch is here that which says that whether I can set off these two, I can set off these two, that my loss from the speculative business is 10,000 rupees, but my normal business is earning me 50,000 rupees. So, can I say my net profit is 40,000 rupees? Can I say that? No, you cannot say that. Because when we say the speculative business is deemed as distinct and separate business na, so it puts a restriction under section number 73, which talks in the which is in the set off and carry forward of the chapter, which says that the loss from the speculative business cannot be set off against the profits of the normal business. What does it mean? That if you are having a speculative business and the normal business, so the loss from the speculative business cannot be set off from the normal business under section number 73. But tell me one thing, just tell me one thing. If you have a profit of 50,000 rupees in the speculative business, but loss of 10,000 rupees in the normal business, understanding me? I have just reversed the case. Now, can you tell me whether I can set off this particular transaction? Whether I can set off this particular transaction and say that my profit is going to be 40,000 from speculative business. My profit is going to be 40,000 from the speculative business. Can I say so? Yes, I can say so. Because the restriction under section number 73 says that the loss from the speculative business cannot be set off from the normal business, but they didn't set the vice versa. That means the loss of a normal business can be set off with the speculative business. Yes. So, sir, whether if I am having any kind of loss from the speculative business, whether we cannot set off from any business? No, you cannot. You can set off and carry forward, but the from the speculative business, loss from the speculative business can be set off against the profits of speculative business only. The loss from the s- speculative business can be set off against the profits of speculative business only. Okay, if you're having the loss of a speculative business and if you do not have the speculative business profit this year, no issues. If you have any in the next year, if you get the profit from the speculative income, you can set off the loss of the earlier year on the profits of the speculative business for the this year. Understood? So loss from the speculative business can be set off against the profit of the speculative business only, not any other thing. Understood? Now see what does it says that because as per section 73, the losses in the speculative business cannot be set off against the profit or losses of any other business. That means they are saying that cannot be set off against any other business. Okay, that means they can be set off against only the speculative business. Understood? Now what does it say? That the following company shall not be deemed to carrying on a speculative business. That if these are the two companies, if they are carrying on, they are involved in these particular transaction as well na, then also it will not be considered that they are dealing in the speculative business, because they are usually their business. They are that these kind of things that they are doing, they are usually their business. What does it says? That companies whose gross total income consists mainly of interest on securities, interest on house property, capital gain, and other sources. Okay, if there is a company whose gross total income is mainly consist of these kind of income, then it is not a speculative business, because they are done on a very random basis, and this is not their business. Okay, that is why it is not considered as a speculative business. Now, point number B: the company whose principal business is trading in shares, banking, or granting loans or advances. If the company is engaged in the trading of shares, banking, granting of loans and advances, then it is not their speculative business, because it is then now a normal business, because the main objective of the company is to trade in the shares and banking or granting any loans or advances. Okay, so it will be treated as a normal business and will not be deemed to be a speculative business for all. Understood? Now, following transaction is not deemed to be a speculative transaction. We have seen na, speculative transaction is what is a contract in the for the sale or purchase of the commodity, which include the stock, shares and all, where the actual delivery is not happening. The settlement is done on a price difference basis. So they are saying that they are following transactions on which we will not consider that these particular transactions are a speculative transaction. These are the normal transaction. Now what are those transactions? Each and everything that you have already studied in the AFM, each and everything whatever you have studied in the AFM is going to be here. See, hedging contract, forward contract, derivatives. Have you heard all these things in the AFM? Okay, derivatives. First is a derivative through RSC, and second is a commodity derivatives through RSC. RSC. Understood? So, hedging contract are not the speculative contract. Forward contract are not the speculative contracts. Derivatives are not the speculative contracts, and commodity derivatives are also not the speculative transaction on which CTT is paid. STT is what? The STT is for the security transaction tax, and CTT is for the commodity transaction tax. And whatever you are paying or you are purchasing or selling through recognized stock exchange, then the CTT or STT is to be paid. Okay, to CTT or STT is to paid. But for the agriculture commodity derivatives, listen to me very carefully. For the agriculture commodity derivative, CTT is not applicable. Rest for all kind of a commodity derivatives, the CTT is applicable because you are purchasing or selling through the RSA. Whether this particular part is very much understood by you, tell me this first. Speculative business is over. Now moving ahead with a case law, which is an important case law. CIT versus K and company, which is an important case law. Let me understand. Let me make you clear by writing an example. Okay, CIT versus K and company case law. Understand what happens. There is a company called K and company whose business is purchasing and selling of the lottery tickets. Okay, whose business is to purchase and sell the lottery tickets. Let me write purchase and sales of lottery tickets. Understood? Now they went to the Assam government. They went to the Assam government and said that we want to purchase the license. We want to purchase the license. We want to purchase the license to purchase and sale of the lottery tickets in your state. Okay, but Assam government said that we cannot give the license based on the company itself. We want a bank guarantee. If we get the bank guarantee in your name, then only we will allow the license. We will only then allow the purchase of license by you. Okay, so what happens now? The K company to acquire the license of from the Assam government to purchase and sale of the lottery tickets, they approached a bank. Okay, they approached the bank and asked the bank to kindly provide the guarantee, on behalf of K and company to the Assam government. Understood? They approached the bank and the bank gave the guarantee to the Assam government. And after getting what? After getting the bank guarantee, the Assam government issued the license. Issued the license. Just tell me one thing. When the bank is giving the guarantee to the Assam government, whether the bank will block something, will the bank will charge something? Okay, they'll block the amount in your bank account. Okay, so they have blocked some amount. Okay, they have blocked some amount. But whenever this whole contract got, whenever the whole contract got completed, okay, the purchase of license and the licenses got over, and the bank has issued the amount to the Assam government after the end. Okay, so whatever the interest they have earned on the bank of this particular blocked amount, whatever the interest they have earned on this block amount, in their interest by the K and company, because the bank has blocked the amount. Okay, now whatever the interest is earned on that particular amount, the question is that only whether this particular interest is going to be in IFOS or is going to be in PGBP. This is the particular question, because usually you will see that the interest income is going to be taxable under the other sources, but the question is that whether I can charge it in PGBP or not. Tell me that. The court says that that this particular transaction, now this particular whole transaction where the guarantee is very much important for the business of the particular K and company, and for that particular business they have issued the guarantee for that on which amount they have earned the interest. That means this particular interest that is earned, it is explicitly for the purpose of business. It is explicitly for the purpose of business, and for that particular thing now the court has used one important word, the word very important, which is a inextricably linked to the business. I am writing it: inextricably linked to the business. Means a transaction without which the business cannot be run. Okay, so what the whole this whole transaction which has been done on which the interest is earned, it is inextricably linked to the business. Without this particular transaction, from going to the bank and issuing the bank guarantee in the name of Assam government, the business cannot be run of the KN company, because it is the regulation of the state government, the Assam government, that for to purchase the license you have to give us the bank guarantee. So without that the business of KN company cannot run. So it is inextricably linked to the business that this particular transaction to be done to run the business. So whatever the interest is earning on that particular transaction, it also relates to the PGBP. It also relates to the business. Hence, it must go to the PGBP. It must go to the PGBP and not in IFOS. Understood? This is the whole case law. This was the whole case law. Understood or not? Tell me that. Okay. Now see. Says he had a deposit margin money with the bank for obtaining bank guarantee, and such guarantee is essential for assessee's business. Any interest earned on such deposit will be taxed as PGBP, as this is inextricably linked to the business. Understood or not? This particular line and this particular case law understood. CIT versus K and company. It is an important case law, though you must remember this. Don't remember the name, but at least remember the content of that particular case law. Understood? Which covers now section number 28, which covers the speculative business. Now we are moving ahead to the next topic, that is a computation of PGBP income. Now we have understood under section number 28 that what all income are going to be taxed in the hand of PGBP. What all income are going to be taxed in the head of PGBP, that we have all understood. Now the question arises that how these all income are going to be taxable, how this income is going to be taxable. So understand the nature of 29 section. Section number 29, what does it say? It says that I will give you the method of computation of PGBP income. By reading the section number 9, you will understand how you will going to calculate the PGBP income. And section number 29 says very philosophically. Okay, section number 29 says very philosophically, it says that do not understand me. I am giving you the path. I am showing you the path that how to calculate the PGBP income. This is not giving you the method how to calculate it. This is just showing the path that if you want to calculate the PGBP income, then do not understand me. Understand the whole PGBP chapter, which says that see, income referred under section number 28. All those income shall be computed as per the provisions of section 30 to 34 43D. Means section number 29 says that if you want to compute the PGBP income, then follow section number 30 to 43D. Okay, what they are saying from section number 30 to 43D, whatever they are saying, na, just do all those things, and finally whatever the answer came, whatever the answer will come, it is going to be your PGBP income. So from section 30 to 37, they have been given certain deductions that you can take the deduction, you can minus these amounts from your profits. Okay, you can take the deduction of this amount. Section number 40 says that we will not allow these kind of deduction, these kind of deductions are not allowed, these kind of expenditures are not allowed. Section number 40A says that some expenses and payments are not deductible in certain circumstances. There will be certain circumstances in which the expenses and payments will not be deductible. Usually it is going to be deductible, but if you have paid more than that amount, okay, if you have paid to a certain kind of individuals, right, relatives, okay, if you have paid in cash more than 10,000 rupees, so these are not allowed. Usually it is allowed, but if you pay for more than 10,000 rupees, it is not allowed. If you have paid to the if you have paid to the relative more than if you have done some expenditure for the relative which is not on the arm's length price, then it is not allowed. So all those things are allowed, but based on a certain conditions that you have to follow these restrictions. Okay, then section number 41 says that we are not satisfied as of now, we will deem some income as your profit. Okay, we will deem some income as your profit. Usually they are not profits, but we will deem it that it is going to be the profits. And there are certain other provisions as well. What are those other provisions? There are certain presumptive taxation, how it is going to be applied. There are certain deductions as well of chapter number 6A, like 80JJAA and other sections as well, which is going to be very important for computation of your PGBP income. Understood. So this is the whole layout of our PGP income. This is the whole layout of our PGP income. Now we are going to start with all these sections. See, the first part is what admissible deduction, section number 30 to 37. Now this is what we are now going to start. This is what we are now going to start. That is admissible deduction and from section number 30 to 37. And if I tell you now, this is the only this is the only heading where you are going to spend more time. Rest all these headings are very easy. Rest all these headings are very easy, and you are going to complete it in 1 or 2 days max to max. 1 day everything is going to be covered, but where the most important time we are going to devote is section number 30 to 37. These are the most important sections. Okay, the range is very much important, so please put your whole focus, please put your full focus on these particular topics. Okay, where I will give you, I'll guide you where you have to focus more and where you can just read and go. Okay, now starting with section number 30, starting with section number 30, which says that rent, rates, taxes, repairs and insurance for building. The word building is important. Okay, that is why it is written in the caps lock as well. Now what we are saying that if I have a building, okay, whether I own that particular building or I have taken that on rent, okay, so I am paying the rent, I am paying some rates and taxes. Okay, I have done some repair work. I have also might be insured that particular building. Okay, so whether all these expenditure that I have incurred in relation to building, not for any other thing, only in relation to building, then what is going to be allowed and what is not going to be allowed, on what expenditure I can take the deduction from the profits, or on what expenditure I am not allowed to take the deduction from the profits. Now that said that if you are a tenant, if you are a tenant or you are a owner, either you are the tenant of that particular building or you are the owner. Okay, for rent paid, the owner will not pay the rent now. Yes, I am the owner of my building, I'll pay rent to myself, no. So that is why it is not here. So if I am the tenant of the building and I am paying the rent, so okay, so is allowed for my business, it is allowed for my business. That means that if I am running my business, suppose this studio is on the rented place, okay, I have taken a building on the rented place because this particular room, this particular studio room I have taken on rent, suppose. Okay, so it is a building that I have taken on rent, so whatever the rent I am paying to the owner of this particular property, whether I can claim that particular rent in my profits, okay, I can charge to the profits and I can reduce my profits. Yes, it is allowed, it is allowed. Now any repair work that is done on a revenue repairs, okay, That means a small repairs, okay, which is not a capital repair, okay. So these are allowed to me, yes, allowed to me. And whether it is allowed to owner as well, if the owner has done some pipeline fittings or everything, like small things, okay, whether they have done like a painting, they have done some paint work, okay. So these are the revenue repairs, okay, whether this is allowed to me or the owner, yes, if any one of them has done this particular thing, so they can take the deduction of that particular amount, yes. Now if they have done some capital repair, if they have done some capital repair, so for capital repair I have said now, under the PGBP, until unless mentioned, the capital expenditures are not allowed. The capital expenditures are not allowed. If the capital receipts are not taxable in this particular chapter, so the capital repairs, the capital expenditures are also not allowed. Do you remember the first thing that I have taught you, that if the capital receipt, so it is going to be taxable in the capital gain, until or unless they said specifically until or unless you have to tax it in the capital gain chapter itself. Understood clearly? Yes, shall I move forward? So, the capital repairs are not allowed or not allowed here. But listen to me very carefully now. Listen to me very carefully. It says that second last part is what? Municipal taxes or local rates paid. Okay, you know the how there is a house rents. You know, if you know, there are yearly house rents gone. Okay, house taxes. Yes, so it is going to be allowed, it is going to be allowed to the tenant as well. If the tenant is paying the house taxes, okay, of the property which is owned by the owner. So if the tenant is paying that, so it will be deemed building. It is said that it is a part that is paid by the tenant of the building, and the deduction will be allowed under section number 32, okay, on which the depreciation can be claimed. So it will be deemed as whatever the municipal taxes or local rate that you have paid, it is a building, okay. They will assume that it is a building, and you can take the depreciation based on that particular amount, okay. The how whatever the building is depreciated at what rate, you can take the deduction of the amount that you have paid. Understood? So it should be taken as per the depreciation basis. But for the owner, they own the property, so if they are paying some house taxes on the owner's own property, so it is going to be capitalized in the cost of the building, and then they can take a depreciation, because they are paying for the building now, so it will be added in the cost of the building, and they can take the depreciation. So there is a difference. For the owner, they said that you have to capitalize that and take the depreciation. For the tenant also, they are saying that you have to take the depreciation. But how they will take the depreciation, because the property is not owned by the tenant. So they said that okay, we will assume it that this particular amount that you have paid now, it is paid as a building. Okay, this particular amount is your building amount. So for that you can claim the depreciation. So they are saying the same thing, that you can claim the depreciation. But on the owner's part, it is the property of the owner, so they can say that you can capitalize it in the cost and take the depreciation. But for the tenant, they can't say that now, because the property is not of the tenant. So for that, they are deeming that particular amount as their property, and said that you can take the depreciation as the rate required. Okay, and if the insurance premium which is paid and the insurance premium which is paid on the building, they are also allowed to both. They are also allowed to both. So if you see the rent, repairs, taxes, local rates, or insurance premium, everything is usually allowed except the capital repairs. And whatever the municipal taxes or local rates are given, they are not just directly minus, they are not directly minus from the profits. What they are doing, they are just providing you the depreciation of that particular amount. Understood? Now if any local rate or taxes which are paid to the foreign government are also allowed in the, remember, in the first chapter, that is the basic concept, I have said you the same thing. Remember, when I was talking about the computation of house property income, I said that from the gross annual value minus the municipal taxes will give you the net annual value, and where the municipal taxes, whether paid in India or outside India, both the deduction shall be allowed to you. The same thing is said here, where the cess or rates or taxes which are levied by the foreign government, that I am paying to the foreign government, are also allowed as deduction here as well. I can take the deduction. Now, in case where a firm uses the premises owned by a partner, means there is a there is a premise which is owned by a partner, and the partner allows the firm to operate from that particular premise. Whether the rent payable to a partner will be allowable as deduction, yes, it will be allowable as deduction, but remember one thing, it should be the normal and the fair rent which is availing in the market. You are a partner, I am the firm, so so that the firm can pay any amount. No, the firm should pay the reasonable amount, it should not be excessive, so that the firm can decrease their profits. Because if the firm will decrease their profits, suppose what should be the scenario, what should be the scenario, listen to me very carefully. If the firm is earning 100 rupees, okay, the market rent of that particular property is suppose 10 rupees, but the firm is paying 20 rupees because it is a partner, they are providing the benefits to the partner, okay, in the form of rent. Now the firm got 80 rupees as profit. Now this profit is distributed to the partners. Now the firm is paying taxes on only 80 rupees, and in the hands of partner 1, partner 2, partner 3, these are exempt. These are exempt because under section number 10(2)(a) these are exempt. Okay, so eventually what happens, see, eventually what happens, that firm is paying taxes, the firm is paying tax on, just a second, yeah, firm is paying tax on 80 rupees, which is reduced. Earlier what should be the actual scenario, it should be 100 minus 10, which because it was the normal rent, only 90 rupees is going to be the profit, and on that 90 rupees the firm should pay the taxes. But here they are showing the excessive profit and the excessive expenditure and reducing the profit, so that the firm should be taxed at the lower rate. Firm should be taxed at the lower rate because if you remember the basic concept chapter, the firm is going to be taxed at the rate of 30% flat. Are you understood or not? So they are reducing here. Okay, the income they are giving to 20, which is given to the partner. So partner can opt for the slab rates now. So it will be more beneficial to the partner. Okay, so for that particular purpose, they have said that see, you can pay the rent to the partner, but you should avoid entering into these kind of a transaction, which is what a tax avoidance plannings. Oh, for that it should be reasonable and not excessive. So whatever the rent you are paying na, it must be what, reasonable and not excessive. Understood? Now understood why they are so said. So now premises which are used for partly business and partly for other purposes should be proportionally allowed. Okay, if I am doing, see, this is my house, okay, now I am doing the business from my house as well, and even I am living in my house, so I am using this particular room for my business purpose as well and for my personal purpose as well. So how much property is used for the business purpose and how much property is used for the personal purpose, this must be determined. Because of that only, if I have done the painting in this particular room, suppose in painting 5,000 rupees has been spent, so whether whole 5,000 rupees I can take the deduction in as per my business. No, you will take it, but not as per the law. You will charge it, okay, that I have spent 5,000 rupees, so I have just charged it to the profits. But this is not legally correct. What legally correct is that you have to bifurcate how this property is partly used for my business and how this is partly used for my personal purpose. Suppose for approximately, suppose 12 hours I am doing my business work, and for 12 hours I am just relaxing and here and roaming here and there and using it for my personal purposes. Okay, so that is my, out of 24 hours I'm 50% using this particular property on my business purpose, and the balance 50% is using for my personal purpose. So whatever the expenditure of 5,000 rupees I have incurred now, so 2,500 to be booked as expenses in the profits, and 25,000 sorry 2,500 is going to be my normal business, which cannot be normal expenditure, which cannot be charged in my profit or loss account. So whether if the property is used for the business purpose as well as for the personal purpose, then it should be proportionally allowed on the basis that you can allow. Okay, you have to first proportionately allocate the expenditure and then take the deduction. So whether section number 30 is very much clear to you or not, because these are the expenditure which is for the building, these are the thing which is for the building. Understood? Shall I move forward? Yes. Coming to coming to point number, section number 31. Section number 31. Shall I move forward on section number 31? Yeah. This also says the same thing. But now they are saying the repairs insurance of machinery, plant, and furniture. Earlier, what they are talking about? Earlier, they were talking about the building. Earlier, they were talking about the building. Now they are talking about what? Now they are talking about repairs, insurance, machinery. Repair insurance of what? Machinery, building, and furniture. Not talking about the building, because the building has been already talked about. Okay. Now again, you are the owner of the tenant. If you are paying the premium, insurance premium, allowed to both. If you are done some revenue repairs, allowed to both. If you have done any capital repairs, it is usually not allowed. But for the owner, they said that yes, you can take the deduction. Yes, you can capitalize it and take the deduction, which was earlier says as well. Okay, in the case of building, the same thing is said here. But there is a catch, which is that if in the case of a revenue repairs for the tenant, they said that there is no such provisions like building. In the building, what we have said that we will deem it as building and you can take the depreciation. But in the plant, furniture, and machinery part, they said that this is not allowed. Okay, this is whatever the amount that you have spent in the capital repairs, it is going to be the dead loss that you cannot take the deduction of. Okay, or rent or hire charges. See here that they talk about the repairs and insurance only. Earlier, what they are talking about, repairs, insurance, okay, but rent and rates and taxes were also talked about. But in this particular part, they are not talking about the rate and taxes. So, whatever they are saying, the rate or higher charges or taxes, they said that they are not allowed as per section number 31. As per section number 31, they are not allowed, because the section number 31 is not even talking about the rent or rates. Okay, so whether we will not get the deduction of rent or rates on the machinery, plant, or furniture, you will get the deduction, but not under section number 31. There is a residual section at section number 37, which says that if you have done any expenditure for the purpose of business, for the purpose of business, okay, and it is not a capital expenditure, it is only a revenue expenditure, and you have incurred for the business, then you can take the deduction under section number 37. Okay, so this is what it is written, that you are not allowed to take the deduction of rent and the other charges under section number 31, because the section number 31 does not even talk about those charges. So whether you can never take the deduction of those amounts, yes, you can take the deduction, but not under section number 31. You can take the deduction under section number 37. Is this point clear to you? Tell me that. Is this particular point clear to you? Shall I move forward? Yes. Important notes. Which talks about that repair includes the renewal or renovation of an asset, but not replacement or reconstruction. In the repair partner, we can say either you are doing the renovation of the work, or renewable, you are making it new, but please do not replace it or reconstruct it from again. Okay, from very much start. Okay, so this is what the repairs mean, which is very much known to you. Now, insurance premium may even take form of contribution to the trade association, which undertakes to indemnify the members against the loss. Instead of insuring my suppose instead of insuring my plant and machinery, I have done what? I have started paying the contribution to a trade association. Okay, there is an association. I am started paying to the that particular association, and that particular association gives me the assurity, gives me a indemnification bond, which says that if anything happens to your building, if anything happens to your plant, machinery, or furniture, we are going to indemnify you, we are going to pay for your losses. So whether I have whatever I have paid to the trade association and getting that indemnification asset, getting that indemnification contract from that particular trade association, whether it will also form part of my insurance premium. Yes, it is also known as my insurance premium. Whatever I am paying to that association as a premium, whether I can take the deduction of that amount, yes, you can take the deduction of that particular amount. Yes. Now, What it's the next point? Machinery used partly for business and partly for other purpose. Deductions may be allowed as AO may determine. Okay, who is the AO? That is the assessing officer. So the machinery which is used for partly business and the partly other purposes, for that AO will determine. AO will determine what? AO will determine the proportionate basis. AO will determine the proportionate basis. Understood? Yes. Now, the word used has to be read in a wider sense as to include active as well as passive use. See, there are certain kind of things, this point that you will understand more in detail when we will come under section number 32, the depreciation wala part. Okay, now what this is that however, insurance repair charges of assets which are owned by the assessee but not have been used for the business during the previous year would not be allowed as deduction. What does it mean? There is certain assets which are owned by the asset, on which asset you have done some insurance work, you have done some repair charges, but you are not using the building during the previous year, you have not even used that particular building, so that amount of insurance premium paid or the repair charges will not be allowed to you as a deduction. So to claim the insurance charges, to claim the repair charges, what you need to do? You need to use that particular asset. You need to use that particular asset, and use word, and the use word which is used in this particular provision, it is used or it is to be understood in a wider sense, whether it is actively used or is the passively used. Suppose some asset is used by me on an actively basis, like every day I'm using it, every day I'm using it, and it is used for my every function of my business. Okay, but there could be some assets which are not actually used, like suppose fire extinguisher. This is my responsibility that there should be a fire extinguisher in the building. Yes, but whether I will use it regular basis. Like if there is no fire, then also I'm using it because I want to claim the depreciation of it. I want to claim the deduction of it. No, I'll not use it. But whenever it is required, whether I can use it. So it is a passive use. It is installed on my building, but I am not using it. But it is a passive use. I'll not put my building on a fire to use the fire extinguishers. Understood or not? So it is a passive use. So if the asset is used actively or as well as the passive use, then all those expenditures are also allowed. It is also termed as what? Used only. Okay, so for that you can allow it as a deduction. Or the asset which is not even actively used or passively used, then on that particular asset the insurance or the repair charges are not going to be allowed. Understood? This particular point is also clear to you now? Tell me that. The same example of fire extinguisher we will take in section number 32 as well. Now, coming to the next point, which is that the deduction allowable under this section is only for the current repairs but not arrears of repairs. Means if you are paying for the repairs that is done in the previous year 25-26, then only we are going to allow this, but you have done the repairs in 24-25, but paying the amount in 25-26, so we are not going to allow this particular transaction. We are not going to allow this particular transaction. So for taking the deduction, the repairs work and the insurance work, or the repairs what you have done, should be done in the previous year 25-26, not the arrears of repair. If you have done the repair in 24-25, then it is a arrear of repairs in 25-26, because you have not paid the amount earlier. Okay, for earlier years, even though they may still rank for deduction under section number 37(1). Okay, you have paid. See, section number 31 says that you cannot take the deduction of the arrears of repairs in this particular year, because section number 31 says that you can take the deduction of only current year repairs. But there is a section which is the residual section, section number 37. You can go and take the deductions there, but till now in section number 31 you cannot take the deduction. You can take the deduction in section number 37. Understood or not? Tell me this. It is very much clear to you. So the section number 30 and 31 is very much clear. Do you want some time, 1 minute to read it? Take 1 minute, read this particular provision and do let me know. Yes. So shall I move forward? Yes. Moving ahead to section number 32, which is going to be the ultra very much important section, ultra pro max section of your whole PGBP. Okay, this topic or this section is going to be very much important, and this depreciation concept is going to be used in every question of the PGBP. The question that you are going to receive in the exam, that is from May 26 onwards, for every question for in the PGP, that is of the first question 14 marks, you are going to get the depreciation adjustment for sure. Okay, so this is going to be the very much important section for your exam perspective. Understood? Now, moving ahead, which says that what is the depreciation and what are the methods? Let me tell you the things first. Depreciation. Depreciation has two methods. First is a WDV and second is a SLM. WDV and SLM. Usually the WDV is allowed in the PGP. Usually the WDV is only the method which is allowed in the PGP, but SLM is also allowed, but for certain companies, but for certain companies only. Okay, if you are doing any these kind of a businesses, then you are going to get the SLM method. Otherwise, usually the WDV method is the only method that is going to be allowed to you. Tell me this first, whether understood. So this is the only method. Now the section number 32 says that we have already discussed that the depreciation it is going to be allowed on a put to use basis or ready to use basis. Tell me that. Whether the asset, the difference between the two is what? First is what? Ready to use. Means the particular asset is ready for use. I can use it whenever I want. But put to use basis means that I have started using that particular asset. I have started using that particular asset. So tell me whether the depreciation is allowed on put to use basis or ready to use basis. So as per section number 32 says that it is allowed on a put to use basis, not on a ready to use basis. So it must be put to use. First point is this. Second, there must be a active use of that particular asset, as well as there should be a passive use of that particular asset. Active plus passive use, any of the use is allowed. Any of the use is allowed, which is just discussed above. Understood. So whether it is actively used, whether it is passively used, and for passively used, I have said that one example is what fire extinguisher. Another could be a spare parts of that particular assets. Okay, whenever it will start, whenever I need it, I'll use it. So it is a spare passive use as well. So whether it is an active use, whether it is a passive use, it is allowed. But now, unlike the Companies Act, Companies Act take the depreciation as per the number of days usage. Okay, in the days of 365, if you are using for 200 days, so you will take the depreciation at the rate of 200 for the 200 days. But it is not in the Income Tax Act. Income Tax Act says that there is a depreciation. See, I want to claim a depreciation. Yes, you can claim the depreciation, no issues. But there is certain conditions. If the asset is used for less than 180 days, if the asset is used for less than 180 days, then what will happen? And if it is used for more than 180 days, then what will happen? We'll understand it very carefully. But first, let me give you some example, something. Okay, conditions to claim depreciation. When you can claim the depreciation, that the asset should be used for the business or profession purpose, that is whether active use or the passive use. See, if we are not using that particular asset for the business or profession purpose, then there is no need to compute the depreciation, because there is the provision of depreciation is under section number 32, which is under the PGBP chapter, and the PGBP chapter attracts only when you are doing some business or profession. So if the asset which is not used for business or profession transaction, then the concept of depreciation is not going to allow. Okay, or the assessee should be the owner of such particular asset, whether wholly or partly. Okay, I'm using that particular asset. Suppose the iPad which I which on which I am writing. Okay, it is an asset. Yes, it is used for my business or personal professional purpose. Yes, whether I can take the depreciation of it. Yes, now whether I am the owner of this particular iPad. Yes, I have taken this iPad on my name, but suppose there kind of another situation where this particular property, okay, this particular studio, whether it is used for my personal or sorry, whether it is used for my business or professional purpose. Yes, so whether I can take this deduction depreciation. Yes, but whether I am the owner of that particular asset, I might be the owner. Okay, I might be the owner, or I might not be the owner. First, I might own this particular property by my own name. Okay, or might be I am the joint owner of this particular property. Okay, so whether I am wholly owning this property or partly owning this in the name of joint owners, then also it is workable. Yes, it is workable. But listen to me very carefully. Listen to me very carefully. If this particular property is not owned by me, it is not owned by me, but it is owned by someone else, and I am just on rent. I am just on rent. Whether I can take the depreciation, tell me that. Whether now I can take the depreciation on the building. No, I can't take the depreciation. Arey, we have studied na just under section number 30 that you can take the depreciation. We will assume it as your building and take the depreciation. Yes, but that was for the municipal taxes and rates that you have paid, not other than that. Understood? For the municipal taxes and rates that you are paying as a tenant, then you can assume that as a building and take the depreciation. But this particular whole building is not mine, so I can't take the depreciation. That they talked about the municipal rates and taxes, not about the depreciation as a whole. Understood or not the difference between the two? Whether now you'll be get confused? No, you should not get confused. Understood? Now, notes. Whether you are a assessee or a beneficial owner. What does it mean? See, I am the assessee. Okay, the property is on someone else. Suppose the property is on the someone else name, but I am using it. No one else is coming and claiming it. Who is the beneficial owner? Who is getting the benefit of this particular property? I am getting the benefit of this particular property. So the depreciation is allowed to me, not on the owner, because who is the beneficial owner? They will see who is the beneficial owner, who is taking the benefits of that particular of that particular asset. Whoever is taking the depreciation, whoever is taking the benefit of the property, they are going to get the depreciation. Understood? Now there are two kind of a cases, which is the lease case and second is the hire purchase case. Okay, if the asset is given on lease, so it is very much important to note that the depreciation is always to be claimed by the lessor. Whether it is a finance lease or a operating lease does not matter. It is always and always to be claimed by a lessor, not the lessee. Means the person who is given the property on lease is going to get the depreciation. But in the case of a hire purchase, what is the case of the hire purchase? That I am giving the installment of that particular property, but that particular property will be mine only and after payment of the last installment. This is what the hire purchase is. What? But I am going to get the right. I am going to get the right of the particular property after the last installment, na. But I am going to get the rights, na. So the law says that eventually I am going to get the rights, na. So I am allowed to take the depreciation from the very beginning, assuming that this particular property belongs to me, because eventually I am getting the rights to use that particular property in the future as well for forever. So assessee gets the ownership only after the payment of the last installment, but he can claim the depreciation from beginning, assuming the assessee is the owner from the very beginning. Understood these particular two cases? This is very important cases. Okay, now depreciation on asset partly used by the assessee shall be allowed to him in of a share of the asset. I have said that now that the asset is on the partly basis, means I am using the particular asset on a co-ownership. So only whatever my share is, suppose my share is 50% in this property, so the depreciation on the whole property I can claim only 50%. The rest of the property depreciation, that is the balance 50%, can be claimed by the other owner of the property. Okay, so whatever my share is, I can claim up to that much amount of the depreciation. Understood? Very much clear. Now the C, point number E, which is also known to you, which is now known to you, which says that in case of a standby machinery or emergency spares, the depreciation shall be allowed even if they are ready for use and not put to use. Usually, the depreciation is allowed on a put to use basis. Put to use basis. But there are certain assets which are emergency spares or standby machinery which are not put to use, but if needed they are ready for use. We can use it now. Okay, so whether the depreciation is allowed to them? Yes, because they are what? Passive use. Because they are what? Passive use, and passive use are also allowed. Yes, they are allowed. So whether all the notes and the conditions are very much clear to you, tell me that first. Done. Now, see, depreciation. If it is used for less than 180 days, and there is a condition that if it is used for equal to or more than 180 days. Okay, this says that the depreciation says that under the Income Tax Act says that if the asset is used for less than 180 days, now, so whatever the depreciation comes, take only 50% as deduction. Take only 50% as deduction. But if it is used for 180 days or more than 180 days, then it is going to be allowed as 100% of the deduction. And the date that you need to remember, that is a golden date, is what? 3rd of October. So if the asset is put to use till 3rd of October, if the asset is put to use till 3rd of October, then it is going to be allowed your full deduction. Okay, 100%. If it is used after 3rd October, means if from 4th October to onwards till your previous year, it is going to be 50% only, because the 180 days calculation ends on 3rd of October. It ends on 3rd of October, so it is going to be your deadline. Okay, if the asset is put to use by 3rd of October in the previous year, then you are going to get 100% of the deduction. Otherwise, you are going to get 50% of the deduction. Okay, we'll see all these things in nitty gritties in the questions. Okay, now moving ahead, see, point of the case law of ICDS limited says the same thing. See, listen to me very carefully what it says. The can company on lease vehicles be denied to, sorry, can depreciation on lease vehicle be denied to lessor as the vehicle is registered in the name of the lessee and the lessor is not the actual owner of the vehicle? We have already seen that in the case of lessor and lessee, it is always and always said that it is to be claimed by the lesser. It is going to be claimed by the lesser. So the verdict was no, lesser is still eligible to claim the depreciation. There are two requirements. First is what? Ownership and usage. Who is the owner and who is using it? Here both the requirements are fulfilled, so the lesser is going to take the depreciation. So in all, what you need to remember is, in the case of lesser or lessee, always and always the lesser is going to get the depreciation of that particular asset. Okay, now Mysore Minerals Limited, there is a case which says that registration of name under the Registration Act is not determinative of ownership. We have already seen that whether the depreciation can be obtained by a beneficial owner. Yes, so it does not mean that who on whose name this particular property is, who is taking the benefit is more important. So the Mysore Limited Minerals Limited case also, it was clear that the beneficial owner is important, not the registration, in whose name the registration of that particular property is. Okay, so who is the beneficial owner is going to be the important thing. Understood? Now, how to calculate the depreciation under the WDV method? It is very much easy. In exam, in remember your old days in class 11th or 12th, what do you usually do? Opening stock plus purchases minus sales will give you what? Closing stock. Understood or not? Tell me this. This is what you do on this particular closing stock. Suppose if it is a property, so instead of closing, we will get the closing property. On this closing amount, you put the depreciation. Correct or not? Correct or not? Tell me that. Understood? This is what they are doing. They are doing the opening WDV of the block. What is the block? We will understand it. What is the block? We will understand it. So opening WDV, we are purchasing whatever we are adding whatever we have acquired minus what we are selling. We will reduce it. What we are selling normally or what we are selling slum sale, we will understand it what is slum sale is. But in the later part, now we'll get what the closing stock, closing property on which the depreciation is allowed. Then it is going to be my net closing WDV. Understood? The same thing, opening plus purchases minus close sales will get the closing on which we will get the depreciation, and it will going to be my net closing WTV. The same thing it is written. So what it is written like 180 days or more, less than 180 days. They are just given the bifurcation. Why this bifurcation is given? Because to calculate the depreciation. See, up to 3rd October on or after 4th October we have already seen now. So just to take the depreciation, whether the depreciation allowed is 50% or 100%, this particular bifurcation is very much important for that particular purpose. Understood? Tell me that. Easy way. Shall I move forward? Yes. Now we are moving ahead with a very important thing, which are the rates of depreciation. What are the rates of depreciation? These are very important thing. Okay. ठीक देखो, first is what? Building. On the building we have seen under section number 30 they have said that it is a deemed building and you have to take the depreciation on it. Yes, the building including roads, bridges, well and tube wells. Okay, if it is used for the residential use as per section number 30, but except hotels. See, if you say that hotels are also for the residential purpose, na, we are staying there, it is for the residential purpose, but it is not the purpose. The hotel, the main objective of the hotel owner is the commercial use. They are using it for the commercial purposes. For me, this particular house where I am residing is the residential use purpose. Okay, but for someone who have made this particular house and giving this on let out and allow someone to live and charging some amount, it is a commercial use for him. Okay, so except hotels are not the residential use. Hotels are the other use, that are the commercial use. So if there is a building which is used for the residential purposes, it is allowed as a 5% of depreciation. But if it is using for the business of profession, if this is a residential building but I am using for the business of profession, like it is my house but I am using it for my business purpose or the residential purpose, so for that it is going to be my 5% of the depreciation. But the other use is going to be the 10%, that is a commercial use. Okay, and if the structure is made temporary or a wooden structure, then it is going to be 40% allow. See, for making this particular building, okay, there is a society on which I live. Okay, in for making this particular society there are workers, okay, which are working on that particular society and made this particular building. Yes, now where the workers what the workers do, wherever they are making the society, they just temporarily create a structure where they can live. Okay, they can spend their nights and then in the morning they can start again their work. Okay, so made a temporary structure or the wooden structure or a temporary structure, then after the completion of the building they'll demolish that particular structure and go away. Okay, so that particular structure was made for 2 or 3 years or 4 years till this particular building is made of. Correct. So that particular depreciation is life is around 3 years, 4 years max to max. The government says that it is we assume that the particular temporary structure na, it is for only 2.5 years. It is only for 2.5 years, not more than that. So that is why they are giving you the more depreciation. They are giving you the more depreciation, saying that you have to demolish it after 2 or 3 years. So demolish it after 2 or 3 years, so that we are giving you the 40% of the deduction. We are giving you 40% of the depreciation, so that after 3 years of 3.5 years or 2 years, this particular property will vanish from your accounts. Understood? So first point is clear, the rate of depreciation, that if it is a normal building, just close your eyes and recall what it is. Building, first part is what? Residential use other than the hotels. It is going to be taxable at the rate of 5%. Then other use which is included in the commercial purposes use. Okay, it is going to be used it is going to be depreciated at the rate of 10%. And if it is a temporary use, then it is going to be depreciated at the rate of 40%. Understood or not? Tell me this. First point is clear. Now coming to the second point, that is a furniture and fittings. Whether it includes a electrical fittings, fan, wires, switches, everything is there. Yes, this is going to be taxed at the rate of, so depreciated. I am again and again saying the tax, but it is going to be depreciated at the rate of 10%. Okay, so whatever the furniture it is, fittings it is, okay, it is going to be taxed at depreciated at the rate of 10%. Okay, understood? Point number two is also clear to you. So the depreciation do you remembering all these things, that building that is for the residential use is going to be depreciated at the rate of 5%, other use depreciated at the rate of 10%, temporary or wooden structure is going to be depreciated at the rate of 40%, furniture fitting is going to be depreciated at the rate of 10%. Clear? Now coming to the plant and machinery. But remember one thing. Do you remember there is a one law that in the rule of interpretation I talked about, where the definition of plant and machinery I talked about. No citer a sources. Do you recalling all these things? In the chapter number one, the basic concept, the rules of interpretation, no citer or nonsense. There is a second last point where I have discussed the meaning of plant and machinery. I have said that this particular plant is not about the tea or bushes. The bushes trees that was not covered in the plant. But what is it is for the factory purposes. So the plant here does not mean bushes or trees. It means what? It means factory. So in the point number, if I see na, yes, in the see, as per the point number six, the plant includes sheep, vehicle, books, scientific apparatus, or surgical equipment, which is a factory use things. Okay, ship, vehicle, books, scientific apparatus, or surgical equipment used for the business or profession, but does not include what? Tea bushes, livestock, building, or furniture. See, if it is a plant, then the building and furniture will not be there. Now, building and furniture is separate, because see, we have already seen the depreciation of building. We have separately seen the definition of depreciation of furniture. So this particular plant mean it does not include the tea bushes or the livestock. Whether you can connect with the chapter number one, no citer a sources, that I have already given the answer of this particular point number 6, and it is also confirmed under section number 43, subsection number 3. Understood? Tell me that. Clear. Now coming to the point number 3, that is a plant and machinery. In the plant and machinery, it says that, see, point number 1 and 2, leave it as of now. Point number 3, if it is ship, vessel, and speedboat, okay, it is going to be depreciated at the rate of 20%. Understood? This much is clear. Okay, now listen to me very carefully. Now this is windmills. Okay, if it is installed 1/4/2024, if it is windmill which is installed, okay, on or before 1/4/2000, sorry, before 1/4/2024, 2014, 1/4/2014, and before 1/4/2014, then the depreciation is what? 15%. Okay, now if it is a oil well or other plant and machinery, it is going to be 15%. So whether I can say the general rate of the plant and machinery, because it is all the other plant and machinery is going to be depreciated at the rate of 15%. So whether I can say the general rate, whenever it is not written, whether I can say the general rate of the plant and machinery is 15%. Tell me that whether I can say that. Yes, so the general rate is 15%. Now, based on the different kind of plant and machinery, the depreciation rate will change. But for the ship, vessel, and speedboat, it is going to be 20%. Okay, which is the only thing which will be depreciated at 20%. That is, ship, vessels, and speedboat are going to be depreciated at 20%, and this is the only thing which is going to be depreciated at 20%. Okay, windmills which are acquired and installed before 1/4/2014 is going to be 15%. Oil wells, okay, oil rigs and oil wells where the oils are extracted are going to be 15% depreciation rate. Now we are going to see the major rates, which are the 40% rate. Okay, so aeroplane, aero engines, computer software. Let me change the pen na, to give aeroplane, aero engine, computer software, books, including annual publication or used in libraries, pollution control equipment, okay, or windmills and equipment which are installed on or after 1/4/2014, or any renewable devices energy, whether it includes the e-vehicle as well. Everything is going to be depreciated at the rate of 40%. Everything is going to be depreciated at the rate of 40%. Clear? So tell me one thing. What is the general rate of quantum machinery? I'll say 15%. What is the rate of depreciation of shipboats? of vessels, it is going to be 20% because it is the only rate which is going to be 20%. The windmills which is acquired or installed before 1 4 2014, 15%. Oil rigs, 15%. Oil wells, oil rigs, 15%. Rest everything is going to be what, 40%, which is what, aero engines, aero engines, computer, books, okay, pollution equipment, windmills acquired on or after 1 4 2014, or any renewable device energies, everything is going to be what, 40%. Now what is left? What is left? Only the motor vehicles are left. Only the motor vehicles are left. Do you remember all these things? Do you remember the point number 3? Every date is recalled by you. Only the ship vessel speed post 20%. Okay, windmill which was acquired before 1 4 2014 is going to be 15%. Oil wells is going to be 15%. Okay, and general rate is 15% only. Aeroplanes, computer, books, pollution control, renewable energy. Okay, pollution control and renewable energies are like same things now. Okay, so it is going to be like 40%. Windmills on or after 1 4 2014, it's going to be for 40%. Understood? Very easy. Now coming to the story of motor vehicles. Now coming to the story of motor vehicles. Generally, what is the rate? Tell me. Generally, what is the rate of plant and machinery? It is a 15% rate. So motor vehicle usually is going to be 15%. But if you are running them on higher, like Ola business, Uber business, they are using the motor vehicles on a higher businesses. Okay, like lorries, buses, taxis. If these are the businesses where your motor vehicles are used, so they are used more. So the depreciation rate will be more because these will be depreciated at a higher rate, because if you are using a motor vehicle regular basis and using it more, so there the high chances that the life of that particular motor vehicle get reduced. Okay, understood? That is why they are saying that if you are using for your personal purposes, na, for the normal business just commuting from here to there, okay, so it is going to be the normal general rate of the motor vehicle. But if you are using it for the running them on higher business, then you are using it more. So we will assume that this particular motor vehicle will not be of much use. It will not be of much use. It will be depreciated early. It will be retired very early. So we will increase that depreciation rate. We will increase the depreciation rate by double. That is from 15% to it will come to 30%. It will come to 30%. Understood? First, these 2 points clear. Usually 15% because the plant and machinery general rate is what, 15%. But if you are using it on higher, then it is going to be 15% extra, that is 30%. Understood? Now there was a time period. Then there was a time period from in the financial year 1920, in the financial year 1920, where the markets were doing very low, okay, and the automobile sector was doing very 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 bad. Okay, at that particular time the finance minister Nirmala Sitaraman ji came and introduced a thing which says that to give the boost to the automobile sector, they said that we are going to allow the additional depreciation. We are going to allow the additional depreciation. Listen to me very carefully. We are going to allow the additional depreciation, okay, to give the boost. Why? How this particular depreciation can improve the automobile sector? See, if people get to know that if I purchase the motor vehicle, understood, yes, I'll get the more depreciation. If I get the more depreciation, my profits will be reduced, and my profit will be reduced, so I'll end up with paying the lower taxes. So for that particular purposes, people start purchasing the motor vehicles. People start purchasing the motor vehicles, and the automobile sector gradually increases and uplifting. Okay, so by the method of depreciation, government improved the economy. Okay, but that particular time frame na, it was given that if you are acquired and put to use, if you are acquiring the particular motor vehicle and using it and put to use on or between the period where it is 23rd of August 19 to 31st March 20, that is in the financial year 1920. Okay, so if you are using it, acquired and using it between these period, Okay, acquired and using it between these period. Okay, because in the 1920 that was a period now. So if you are acquiring it and using it between this period only, then we are giving you the additional 15%. We are giving you the depreciation of additional 15%. If you were earlier getting 15% of the normal motor vehicle and acquiring it in 23rd from 23rd of August 19 to 31st March 20, then we are giving you additional 15%, that is going to be 30% on the motor vehicle which was earlier at 30%, like running them on higher, you will get 15% extra, then it is going to be 45%. Then it is going to be 45%. And on this particular on this particular point, I need to discuss one thing. But as of now, I need to discuss one more thing related to this particular part. See, it is not a part of your syllabus, but I want you to make this point very much clear. I want you to make this point very much understood. Okay, how these particular things work. See, from 31st, 23rd of August 2019 to 31st March 2020, this was the period which the government said. Okay, but during that period, na, when this particular announcement was done in the press conference by the Nirmala Sitharaman ji, na, the parliament was not active. The parliament was not active. Okay, there was no parliament session going on. And it is what? It is the rate of depreciation. It is the rate of depreciation which is mentioned under section number 32. Means they are adding something. They are adding something in the act. Act is already passed by the parliament. Remember the first lecture. If they want to do any kind of change in the act, they need a parliament approval. But during this particular period, when the press conference was done, the parliament was not in powers. Okay, that was not operative. So how does Nirmala Sitharaman ji made this particular changes? Tell me that. The act can only be changed by the approval of the parliament. But when this particular announcement was done, the parliament was not in powers or not in action. So how this particular changes is made in the act? There is a way out which says that ordinance, which is a ordinance. Is the power given in the Constitution of India, which says that if the parliament is not in power or it is not functioning, okay, as of now, and the government wants to make some law in emergency, okay, they want to make some law in emergency, so they can directly overriding the parliament. They can directly go to the president. Okay, they can directly go to the president and sign this particular document, sign this particular proposal. Okay, and after the signing of the president, okay, it will become an act. It will become the part of an act. But the main important part is what? Whenever now the parliament comes into action, whenever the parliament comes into action, this particular ordinance should be passed by the parliament, should be first passed by the parliament. Okay, of now you can use it, because in the emergency situation you can use the powers of the ordinance, directly overriding the houses of the parliament. You can go to the president and sign it and enact this particular act. But whenever parliament comes into action, whenever parliament comes into rule, okay, please, first and most foremost thing, pass this particular ordinance. So the ordinance life is from where to where? When the ordinance is signed, to the parliament coming into action. Whenever the parliament comes into action, you have to take this particular ordinance to the parliament, and then parliament will pass it, and after then only it will remain the act of in the and then only it will remain in the act, otherwise you need to remove it. Okay, so this particular ordinance was passed by the parliament. That is why we are still reading this particular thing. Understood? And sometimes I say plays on these dates, so remember, this is what this date is very much important, that is 23rd of August 2019, and this you will remember. Okay, see, 15th August 15th August is our Independence Day. Remembering 15th August is our Independence Day, just remove point and put a plus, it will come to 23. This is the date, 23 August 2019. Understood clearly. This is a very vague method. But if this works, remember this date, 23rd of August 2019. Understood. Shall I move forward? So whether the depreciation rate of building is understood, depreciation rate of furniture is understood, or plant machinery is understood. Now the last thing is that which I have already talked about, that the intangible assets, it is going to be taxed at the rate of 20, sorry, depreciated at the rate of 25%. That is already taught to you. Where? In the non-compete fees under section number 28. Whenever I was talking about the point number 10, I talked about this. I talked about this. I don't know whether I have wrote this particular thing, but I talked about this. Yes, I talked about in this particular point non-compete fees, that for this ABC Limited, okay, for this the ABC Limited who is getting the amount is going to be the PGP income, but for the XYZ Limited it is going to be an intangible asset and it is to be depreciated at the rate of 25%. I talked this about. Understood? Yes. Now moving forward. Now, notes. It is very much important, it is very much mandatory that you claim the depreciation. It is very much important and mandatory to claim the depreciation. It is not optional that I do not want to claim the depreciation this year. No, it is not your choice. You have to mandatory claim it. Okay. And AP bags and mobile phones are not computer, and the depreciation is going to be as per the normal plant and machinery and 15%. Okay. What is the AP bags? Okay. What is this? See, in the companies you have seen the internal landlines are there, like if you press one, the call will go to this particular desk or internally of that particular office. If you press 2, then it will be reached to the manager. If you press 3, then the HR will pick the call. All these things, is it internally the system? Yes, internal phone calls. Okay, internal landlines. So these are called was APBACs. Okay, understood. Now, intangible assets includes know-how, patent, copyright, trademark, license, franchise, or any other business or commercial right of similar nature, but other than goodwill of business or profession. Means the goodwill is not an intangible asset, and by removing the definition, by removing the goodwill from the definition of intangible asset, it is said that on the goodwill you are not going to get the depreciation. On the goodwill you are not going to get the depreciation, otherwise all the intangible assets are going to get the depreciation, but other than goodwill, means on goodwill you are not going to get the depreciation. Understood? Now, depreciation for the computer. Okay, we have seen that it is at 40%. So for the computer accessories as well, it is going to be 40%. Okay, see, on the computer software, and if we are including computer, so that means the computer accessories are also going to be depreciated at the rate of 40%, which is UPS, printers, scanners, okay, monitors, everything is going to be depreciated at the rate of 40%. Okay, now the depreciation allowed when asset used to actually put to use and not ready to use. We have already discussed this now, that you are going to get the depreciation on a put to use basis or not on a ready to use basis. Everything we have discussed till now. Yes, there are the methods of depreciation. Now, usually it is going to be SLM or WDV, but there are certain kind of, for only one kind of a property of business, that is going to be the SLM method as well. Okay, we'll understand it in the SLM method. What is it? The business of generation or generation and distribution of power. Either you are doing only the generation of power, or you are doing the generation and distribution of power. Okay, then you are allowed to get the depreciation on SNM or WDV, whatever you want. But for any other businesses, you are going to get only WDV method. So as of now we are studying the WDV method, so let's be more focused on this particular point. And for the point number 1, we are going to discuss whenever we are going to discuss the SNM method. Understood? This is going to be very much clear. See, this is going to be here na. Yes, SLM depreciation under SLM method, we are going to discuss the same thing. Okay, so whenever we'll come here, we'll understand this point. Now moving ahead, see whether I have discussed this. The depreciation for put to use for less than 180 days, depreciation is restricted to 50% if the asset put to use for less than 180 days in the year of acquisition. Restriction applies only in the year of acquisition. What it is? What it is? We are going to discuss tomorrow. Or shall I discuss now? Let me discuss and complete this particular additional notes as well. It is going to be very easy. Just let me discuss all these things and then we're going to wind up. Okay, what it is saying that it is very much important that restriction is only applied in the year of acquisition. Now, what it is saying that come to the board notes. See, the restriction is what it should be acquired and put to use in same previous year, then only this 50% restriction is going to be applied. That means that suppose I have acquired a particular asset in the previous year 24, 25, 26. Okay, put to use and put to use in the same previous year 25, 26. Then only this 50% or 100% 100% is going to be allowed to me. 50% or 100% is going to allowed to me. If it is put to use before the till 3rd of October, then it is 100%. On or after 3rd October, from that is on or after 4th October, then it is going to be 50%. That is very much clear. But suppose I have acquired a particular asset in the previous year 24, 25, but I am put to using it 25, 26. Suppose on 31st March 25 I acquired the asset and I have put to use on 1st of April 2026. Now, whether the full depreciation is allowed to me or the half depreciation is allowed to me, tell me this. Now, here the full depreciation is allowed to me. Okay, there could be another case. 31st March 2025, I acquired the asset. 31st March 2025, I acquired the asset, but I had put to use the asset on 10th of October 2026. Tell me, full depreciation or half depreciation? Full depreciation or half depreciation? Still I get the full depreciation, not the half depreciation, because the first condition is what, that it should be acquired and put to use in the same previous year. These are not the same previous year, these are the previous year 24, 25, and this is the previous year 25, 26. These are not in the same previous year, so the condition of 50% is not applicable. So in that particular case, even after I put to use after 3rd October, even I have put to use it after 3rd October, then also I'll get the full depreciation, because the provision of half depreciation is not applicable here, because the provision of half depreciation is going to be applicable only and only when it is acquired and put to use in the same previous year. Understood this or not? Tell me that. Very much clear? Yes. Now see, if the S, this is very much now understood by you in the year of acquisition, that the restriction applies only in the year of acquisition. Understood? Now, if the asset acquired in during the current year and not put to use, then the depreciation shall not be allowed. If you have acquired it and not put to use, then the depreciation shall not be allowed for you, because acquisition plus put to use is important. And if it is not put to use, the depreciation will not be allowed for you for such asset. But the asset should be added to the block of asset. What is the block of asset? We will see. Okay, actual sale price of the asset shall be reduced from here and not the fair market value. We have reduced the selling price, so whatever the actual selling price, we will reduce it, not the fair market value. Okay, whatever I am getting it by selling the particular asset, I am going to reduce it. Okay, now what it says, that money payable means the sale price. We have used it here, the word is what, money payable, where I have already written what, the selling price of an asset. Okay, so money payable means the sale price or an insurance compensation in respect of an asset sold, discarded, demolished, destroyed during the previous year, and the amount of scrap value. So whatever the amount I am getting it by selling the particular asset, or if the suppose the asset is was destroyed in the fire, so I got the insurance compensation all over what I am getting from asset sold, discarded, demolished, destroyed, whatever I am getting it, whether it's a scrap value, whether there's an insurance premium, we are going to minus it. That is the income, that is the sale price, we are going to minus it. Understood? Now this particular provision is going to be taken at the last. This particular provision is going to be taken at the last whenever we are going to start with solving of the question and answers. I am going to take this particular first, explain this particular provision and then start with solving the questions, and then I'll start solving the question. This is the ICSM illustration. Illustration number 3 is written here. Okay, because whenever you will after completion of the syllabus, whenever you will read this, you can study from here as well. But as of now, we are, for the purpose of our classes, we are going to take this particular point in the last, because I want to solve this particular question with the question answer session itself. Understood? Now, additional notes for the depreciation, and you are not going to be affected by that particular question. I will take it at the last. Block of asset means the same class of asset with the same depreciation rate. See, in the particular, in the income tax act, they does not say that every asset to be depreciated separately. They said that if there is a same class of asset, if this is a building used for the residential purpose only, and you have 10 buildings of the for the usage of the residential building, then club all those building in a one block and just depreciate that block. Okay, so they are saying that every the same class of the asset are going to be clubbed and depreciate the whole block. Okay, so if I have the 10 buildings of the residential use, so I'll club all the 10 buildings in a block. Okay, and I'll depreciate the block. So everything is going to be depreciated. Now if I'm depreciating the block, so every 10 buildings are going to be depreciated. Yes. Now, whether can I club the residential use building with the commercial use building? No, these are not of the same class. These are the building, but not of the same class, because the depreciation rates are also different. That is why they have said that it should be of same class, but with the same depreciation rate as well. Understood or not? Now, if the asset is required and put to use during the previous year for less than 180 days, then only 50% is allowed to the deduction. Yes, I have said that the balance 50%. What about it? No, it does not get carry forward. If you think that we are getting 50% only, then the 50% is going to be carry forward. No, it is not going to be carry forward. But this is not the case in the additional depreciation. In the additional depreciation, it is going to be different. Okay, now we have seen that the land and building, sorry, on the land is not a depreciable asset, you know that, and the goodwill is removed from the intangible asset definition. So the point number 3, which is written here, is not going to be depreciated. Now the revaluation of asset is irrelevant. The actual cost is relevant for the income tax. See, what you are doing, the revaluation in the Companies Act, you are doing the revaluation for the purpose of the accounts. Okay, FR, but not for the income tax. Income tax is only based on the actual cost. We are not concerned with the revaluation of assets. Now, when a machine is discarded in a previous year, not sold, it is discarded only. In such cases, means we are not using it, we are not sold it, but we are not using it. So company can still claim the depreciation thereon. That is the discarding of machinery, not putting it to use this year, which will not lead to any money payable and hence can be removed from the block. Means you have not sold the particular asset but discarded it. That means you are not using that particular asset in the previous year, you have not put to use this year. So for that you cannot reduce it from the money payable. This is not the sales. Okay, money payable is what the selling price, this is not the actual sale. So that you cannot remove it from the block, you cannot remove it from the block. Understood? It could be used, but you are not using it. If you are not using it, it is still remain in your block. Okay, because the active or passive use both are allowed. Understood? So point number 1, 2, 3, 4, 5 is done. Now coming to a one point which I marked here, that I want to talk about this particular 45% rate. This particular 45% rate. Here you see the maximum rate. The maximum depreciation rate is 45% in this whole chart. The maximum depreciation rate is what? 45% in the whole chart. Now, listen to me very carefully. There is a section which we have already seen under the basic concept chapter, that is 115 BAC, the new or the default tax regime. We have seen that in the default tax regime, the new tax regime, it said that the maximum depreciation that you can claim is only 40%. Is only 40%. Is only 40%. Sorry, not in 15 BAC. There are BAB and BAA. Okay, BAB and BAA. These are for the companies. Like for the normal thing, for the normal individual, there is a old regime and the new regime. Same way, there for the companies as well, there is a regime that we have already studied, that normally that is 25% or the 30% of the tax rate. But there are also concessional tax rate. Concessional tax rates are given for the companies under section number BAP, 105 BAB and BAA, where the tax rate can still go below, can go to 15%. 22% as well. So there they have given the demo, their limit, that the maximum depreciation there could be 40% only. There could be 40% only, and this is the only case. This is the only case which will hamper there. Which will hamper there, that you are allowed to take 45%, but due to the restrictions of 115 BAA or BAB, you can only take the depreciation at the rate of 40% itself. This is the only case that you need to remember. But in the chapter number 9, when we will see 115 BAA, BAB, we will discuss it in more detail. Understood? So till now, today we are leaving here. Okay, from tomorrow we will start with the additional depreciation. From tomorrow we are going to start with the additional depreciation. Understood clearly? Yes. So all the very best. Keep writing, keep sharing your notes. Many of the students are sharing the notes on with me on the WhatsApp. Kindly share your notes so that it is your motivation to keep writing, to practice, and it is your duty to revise everything that I have taught today in the, yeah, in the tomorrow's lecture. Before coming to the lecture, you have to revise each and everything. Okay, all the very best. Keep writing, keep revising, keep recalling everything. You are going to get the exemption this time. All the best.